Welcome back to the deep dive. Okay, today we're jumping into an investment platform that's really stirring things up. Infinite Beacon. You've probably seen the ads. Very slick branding, right? Big promises on referral rewards and those guaranteed returns that they always sound a bit too good to be true.
Mm-hmm. And that's exactly what we're digging into, the mission today. It's really about unpacking the gap between those smooth marketing claims and, frankly, the quite alarming reality that seems to be emerging from independent analysis community threads.
Yeah.
We want to give you that quick critical insight. Understand why this thing looks like such a high-risk situation.
And it's a huge gap, isn't it? The platform, it throws around terms like compliance credentials.
Right.
We've even seen press releases citing FIU registration, that's the Financial Intelligence Unit. But then you look at how it actually operates.
And that's where it hits a wall. The
Ugh.
operational reality is, well, it's about friction. Real-world financial friction starting to show up suddenly.
Okay, what kind of friction?
What we're seeing reported pretty consistently are these sudden withdrawal delays, unexplained, or worse, people finding their accounts just blocked.
Blocked entirely.
Yeah, and that's often the first loudest alarm bell. It tells you those paper credentials, whatever they are, aren't matching up with the actual performance, how money moves.
Okay, let's unpack that pattern because it sounds familiar. The sources we looked at, they really highlight this classic Ponzi-style mechanism.
Absolutely.
It seems they're quick with the small early payouts. That builds trust, gets people comfortable, maybe gets them referring friends.
Precisely. That's the hook. It builds confidence fast, keeps the referrals flowing, which is crucial for them.
But the bigger amounts.
Ah, yes. That's when the story changes. When someone tries to pull out a larger sum, something significant, that's when the delays kick in.
How do they stall? What's the mechanism there?
Well, the sources detail a few common tactics. Suddenly, your request needs manual review, or they ask for more KYC documents, things you might have already provided.
Right, delay tactics.
Or customer support just goes quiet, stops responding. It lets them keep using the new money coming in to pay out those small trust-building withdrawals.
While freezing the big liabilities.
Exactly. Pay a few, stall the rest. It's a pattern.
So, okay, if they're claiming this FIU registration, how can the ownership still be so murky, so opaque? What's going on with the regulation side?
Well, that's where it gets really confusing. The regulatory picture is, let's just say, muddy.
Muddy how?
You have those initial claims, maybe an FIU mentioned somewhere, but then investors, watchdog posts, people digging deeper, they report there's no clear SEBI or RBI licensing.
And for listeners, SEBI is the main market regulator in India, RBI, the central bank. Those are the big ones you'd expect to see.
Definitely. So you've got this opaque ownership structure. You don't really know who's behind it. Plus this lack of clear oversight from the crucial regulators. It's a textbook recipe for financial risk.
We're also seeing a lot of social media posts, right? Videos alleging big losses, people saying they filed complaints.
Yes, quite a few. It points to a growing number of users hitting that wall we talked about.
So let's bottom line this. For you, the listener, maybe thinking about investing, or maybe you already have money in. What's the takeaway? The assessment from the sources is pretty blunt. Infinite Beacon is tagged as very high risk. And honestly, any platform pitching guaranteed returns, especially if it seems reliant on new money, that should be a massive red flag flashing right in front of you.
Mm-hmm. Which brings us to what you can actually do if you already have funds in there. The advice is cautious. Maybe try withdrawing small test amounts fold. See if it works smoothly.
Test the waters.
Exactly. And crucially, document everything. Screenshots, transaction IDs, communication attempts. Keep records, just in case those funds become inaccessible later.
Good advice. And for people just considering it, potential investors.
The sources are really strong on this.
Yeah.
Just stay away for now. Don't put money in until there's completely transparent, verifiable proof of proper licensing. SEBI, RBI, the works.
And not just licenses, right?
No. You need audited financials. Proof the company is sound. And, maybe most importantly, a consistent, reliable history of withdrawals, working without friction for everyone.
And the old rule always applies. Only invest what you can truly afford to lose. But here, the risk seems way out of proportion to any potential reward.
It really does. Which leaves us with a final thought for you, something to consider more broadly, perhaps.
Okay.
When you see a platform where the claims, the marketing, the promises are crystal clear, maybe even slickly presented, but the operational transparency, things like how easily you can get your money out or who actually owns and runs the company, when that site is fundamentally muddy, unclear, Which information stream should you trust more? Which one gets more weight in your decision?
That's a really powerful question. It forces you to think about where the real substance lies beyond the promises. Well, that brings us to the end of this deep dive. Thank you for joining us as we navigated these rather murky waters around Infinite Beacon. We hope this helps you stay informed and make safer financial decisions. Thanks for listening.